It starts in the spring of 1999. I shorted, I think it was 11 or 12 internet stocks. And in like 4 weeks, I had lost like $600 million. The fund is down like 17%, and Duquesne is down 17%. I can't take it anymore. And I told you earlier, I'm not emotional. This was a real emotional, really dumb move.
Now, you took a sabbatical in 2000.
Yeah.
What was the reason behind that?
It's a painful but really fun story. It really starts in 1998. Well, no, it starts in the spring of 1999. I shorted, I think it was 11 or 12 internet stocks, not the leaders like AOI or Yahoo, but the also-rans. And I believe the position was like $200 million. And in like 4 weeks, I had lost like $600 million. So it was the first time I'd ever had a big drawdown. I was down like 16 or 7% in the spring of 99. I then pivoted and realized that Greenspan easing because of the Asian financial crisis, while our economy was strong and we had the internet and all this behind it, I went out and hired a couple of young managers to buy tech stocks that I didn't know how to spell. They had their own little accounts, and like I would plow in on top of their positions. And we ended up the year, I think something like 42 net or something after being in this deep hole because, you know, I rode this crazy NASDAQ wave in 99. So then in January, I just said, this is ridiculous. And I sold out all my tech holdings. Like, I can't remember, it was like, they had grown to like $6 billion. It was enormous for that period of time. And I actually went and told Soros why I had sold them out. And next thing that happens, the two little satellites inside, they don't sell out. They're gamblers. I don't really care because Quantum's huge and they're this little thing. They're not going to affect the performance that much. But Nikolai, they're making like 4 to 5% a day. I mean, the market is still roaring going into March. And I'm watching this and I'm getting really annoyed with myself that I'm not still in this trade. And then around early March, I can't take it anymore. And I told you earlier, I'm not emotional. This was a real emotional, really dumb move. I buy everything back. I think I missed the top by about an hour. So I buy back all these tech stocks, and within a week, I know I'm dead. And Quantum goes from like up 14% to up 1% in a week. And I go in and now I've already been through the trauma of the spring before. I recovered from it, but it had a big effect on me, the stress. I had young kids, you know, and it's like a repeat of the year before. So I go into Soros and I tell him two things. A, I'm getting out of all this stuff. B, I'm quitting. We can't tell anybody because I got to liquidate this portfolio. But the NASDAQ is in the beginning wave of a down 90% move and you can't get out. So by the time I get out, it takes a few weeks. The fund is down like 17% and Duquesne is down 17%. And I'm just exhausted. I've been running this high profile fund for 12 years. So I sell everything out, everything of Duquesne, send my investors a letter and say, I'm going on a sabbatical. I don't know whether I'm coming back or not. You can take all your money out, but if you take your money out, if I decide to come back, I can't guarantee I'll let you back in. I think I had like 200 clients. One of them pulled their money. I remember who it was, but they'll remain anonymous for now. So I shut everything down. I go to Africa with my wife and kids. And the best thing I did is during the summer, I refused to expose myself in any way to something that would tell me where the markets were. So I'm not allowed to watch TV. I'm not allowed to see the Wall Street Journal prices, nothing. So I come back in Labor Day. I think my wife couldn't have handled me being around once the kids go back to school. Sort of humor, maybe not. So I come back and it's remarkable because the S&P has rallied back almost to the high. The NASDAQ's retraced about 85% of the decline, but the dollar is up, interest rates are up, and oil is up. three death knells for markets if you look at history. So I then start calling all my clients who are basically small businessmen. They're not fancy institutions, and all their businesses are terrible. So then I call Ed Hyman and I say,
He's an equity strategist,
yeah,
microeconomist.
he's probably was the number one institutional guy, whatever that rating is, institutional investor economist. And I say, this is very odd. And I've been out of touch, dollars up, blah, 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 blah. And 2 days later in his daily missive, he has regression analysis. And it says it's 50%, I think, currency, 25% oil, and 25% interest rates. And it looks 1 year forward, and it predicts earnings. And it's predicting that earnings are going to decline 36% the next year, and the Wall Street consensus is they're going to go up 18%. So combination of that, listen to my clients, the fact that Greenspan's got a tightening directive on, which I think is inappropriate, I start buying all these treasuries. And the market doesn't go my way, but all the information keeps coming, so I keep buying more and more and more and more. So now I have a 350% 10-year equivalent in the fund, and then I get lucky with the Gore-Bush fiasco, economy falls apart, I end up making 40% in the fourth quarter. So I had written the year off. When I came back, I'm down 18. I assume, okay, at least don't have to worry about this anymore. I'm finally going to have a down year. And it's like the best quarter I ever had. And to this day, if I had stayed managing money, I think I'd have been tied to knots, and there's no way I would make that trade. It was the fact that I was arrayed for 4 months, had a clean slate, had a clear head, and just looked at the new evidence. So it was a very, very horrible beginning and a very lucky ending.